Winston Churchill once said that those who fail to learn from history have a tendency to repeat it. And I think that's absolutely true and critically important at the juncture where we are right now, that we understand the history of our public finance system, because what they have in mind for us is not such a great thing. And I have the perfect guest to have this discussion with coming up. I'm Lynette Zang, Chief Market Analyst here at ITM Trading, a full-service physical precious metals house specializing in strategies to help you survive and, dare I say it, even thrive through the reset that has already begun. And I'd like to welcome you all to Coffee with Lynette and my very, very special guest, Jett, who is an engineer and an attorney by trade. He is in 2000. He started in the financial sector, and when he saw what was happening there, because of his background, he dug right in to see what the truth really is. And he's written this amazing book, which I can highly recommend to all of you. Y'all probably know that I'm definitely very much a student of the Depression, of the kickoff of the fiat system. And boy, there was so much good stuff in here that, quite honestly, I'm going to slow down a little bit and read it again. It's worth it. And all of the links to his information and his books are below. So, with having said all that, hi, Wayne. Thank you so much for coming here today.
Lynette, I'm really delighted. I've watched quite a number of your interviews, and I feel like I know you. And so getting a chance to speak with you directly is a real pleasure.
Well, I feel the same way. Actually, I've watched quite a few of yours. And I usually like to start with a question. What really motivates you to do this work?
I think a feeling of responsibility to fellow Americans and to my family, to the people I grew up with, very good people, outstanding people, confronting very difficult circumstances and doing it with a very great attitude, smile on their face, never looking back and so forth. I still remember those days as a boy, very fine ones, but a time that was extremely difficult. My father was born in 1900, so he was right in his prime years during the Great Depression. My mother was considerably younger, but still a young woman, young person when young mother. And all of those experiences with those people, I was very fortunate, to tell you the truth. We were not well off at all, but boy, we just were as good as anybody else, with everyone treating everyone well, and great teachers in my little town school and so forth and so on. So those are the people that I relate to still. And it's quite an experience. I really never expected to be the one to write a book such as this. I had no thought of it, but once I got into studying classical economics to try to do myself a favor in regard to asset management, I got in well enough and finally was disgusted enough that I couldn't really write in the financial community about financial fraud. And so as a result, I decided to do a little research on my own and started looking into the diaries of Henry Morgenthau, who was Henry Morgenthau Jr. was the Secretary of Treasury essentially the entire time Franklin Roosevelt was president, except just for about the first year, and then he was his right-hand man on gold purchases, among other things. And so in those circumstances, once I didn't have to look very long before I started finding things in his revelations. He kept a daily diary that was finally edited with his help and then published by a Yale historian. And I knew about it. It was multi-volume work, still there, and I cite it quite a lot in my book. but he told things that were going on a day-to-day basis, and it was, I'm sure, events that would relate very much, very quickly to you and your audience when he started buying gold with federal funds very shortly upon office. And of course, one of the very first things he did was confiscate gold, requiring all Americans to turn in all of their gold coins except for 1 ounce per family or household, I think it was. And from there, it got worse. And so I'd be happy to go through those things with you, whatever you'd like to talk about.
Well, actually, this is a really critical period, so I'm happy if you go into that. But I'd like to kind of back up for our viewers the difference between Keynesian economics and classical economics, because you do talk quite a bit about that, and that's really...
Well, yes. Well, let me just give you, I cover that in my first chapter. There are just a few basic principles that when you have them in mind in classical economic theory, it really puts you a long way ahead. Matter of fact, I say flat out that if you understand these principles, you won't be fooled by another Keynesian argument about why we have to do some stupid thing. That's the theory of the firm. The theory of the firm is what classical economics was called back in the days of Adam Smith and John Maynard Keynes, and his father, who even before him taught classical economic theory at Cambridge University. And it essentially was simply using good common sense, that is, what public policies can we adopt that would make it more possible for ordinary common people to make a living, to prosper, to do business. What is it that government is doing presently that keeps them from doing that, and how can we correct it? Those are the kind of things that Adam Smith began raising, and of course he made some brilliant observations. Observations, not so much insight on his part, but he discovered the pen factory and their practices and the tremendous improvement in productivity that they could achieve in a pen factory by specialization in tasks of manufacturing pens, such a simple so-called task as that. But once they discovered they could break it into 11 different tasks, that was a breakthrough that really laid the groundwork for the mechanization of industry and of production that created some of the really great businesses of the world after that insight was passed around well enough that it became a real movement. And so we had a period of growth in the 19th century, all through the 1800s, even starting in the 18th century, 1715 thereabouts. 1776 was the Wealth of Nations with the pen theory, the pen factory story. And but let me start with the most important principle that I regard as the centerpiece of central or classic economic theory, and that is that monetary policy should be guided by the principle that your monetary unit must be stable in value.
That's what we work for.
If it moves up in value, we call it deflation. But if it moves up in value and gets more valuable, then it's going to cause a very great strain or dislocation of business operations, because every business must cut its prices in order to sell product. And that, of course, means if this deflation is sustained, they go out of business and they go bankrupt. Because when you're selling, when you're having to sell at a price that is lower than your costs, and obviously the more you produce, the more you lose, and the faster you go out of business.
Although
which
that's
was,
not really true today, is it? With
well,
all these unicorns.
um, uh, the great lesson we should have had in it was in
Yes.
the 1870s. That was when in 1872, I think it was, Congress decided they would go back to the value of the dollar before the Civil War, before the greenbacks. And at that time, the value of the dollar was about 50% cheaper than it was before the war. And so they decided they would go back to that former value in 1879. And so the experience between the time they passed that law and 1879, the date it went into effect, was a continuous period of deflation that bankrupted businesses all over the country, every size. It was absolutely, and it's still called, the longest economic contraction in U.S. history because it was continuously deflationary, but by statute. Um, I'm amazed. I was a great fan of Milton Friedman, but look at his monetary
Mm-hmm.
history, and he never mentioned that fact in his analysis. Somehow his definition, or the definition imposed on him in writing that book, was to avoid that explanation. And though he was very expressive in saying how deep and how severe that contraction was, he never defined it as being related to that statute. Another one of the so-called mysteries about how you explain what is officially done by the powers that be.
Well, then I just want to kind of ask you this question. Do you think that that's what led to them deciding that inflation was a much better position to be in, and therefore, going back to the Keynesian economics, I mean, it really is all about inflation.
Well, I would say, in my interpretation, is that it ought to have been, and in fact was, the opposite of that. It was a dire lesson, although you still have a hard time finding economists who admit the lesson of the 1870s. But back then, they simply went back to the gold standard. And, well, in fact, the statute put them back on the gold standard, and they continued in that vein, and economic prosperity returned. And in
Okay.
fact, we had such a tremendous run of 30 years from 1900 to 1929 of expansion in the United States and elsewhere in the world on the gold standard that who in the right mind would have said that's a bad thing? Yes, we had then the same thing we have now, which is a cadre of very, very powerful people, large financial operators that were able to create crashes of one kind or another, 1907, 1908, and things of that sort. And there was some concerns about what to do about it, but unfortunately, the wrong thing was done about it rather than the right by Woodrow Wilson in 1913 with the creation of the Federal Reserve.
Right.
And with the Internal Revenue Service and the income tax, the tax on earned income, which was the hallmark of the middle class, the people
Right.
who work for a living and are able to support themselves as opposed to be wards of the state or the wealthy elite. So with that in mind, basically back to the principle of making sure that you neither inflate nor deflate the currency, that in my estimation is the most important role that can be played by a mechanism for creating good money or good currency. And that is why gold is so important in that regard, because among all materials, it is the one that maintains the most stable value of any that we know. With that stability, you use it as a yardstick for the measure of your currency, and you have a ready mechanism for easy monetary management that keeps you away from destroying your industrial production, in a summary way of saying it.
Well, it forces you really to be respectful of the current situation. But I wanted to ask you, because you said that between 1900 and 1930 was, really almost the best of times. But in that transition to the legalizing the Federal Reserve, they printed almost 2.5 times the amount of money. So that was really the QE of that day, but they couldn't really go further because they still had restrictions because we were on the gold standard. So can you liken somehow the QE of yesterday and what they're, well, I mean, I don't even know exactly.
Let me try that a little bit. Of course, as you know, we were on the gold standard from
Yes.
1879 until we entered the war in 1917. I think we went off the gold standard. We suspended shipments of gold abroad based on the gold standard. And for that short period of time, I can't remember exactly how many months, but it was something like a year, maybe a year and a half, that we had suspended those, and then we went back on the gold standard. And when we did, there had been inflationary pressures in that period of the war. And when we went back on the gold standard at the same value of the dollar as before the war, once again, we had a contractionary period and a sharp deflationary contraction right at the beginning of the 1920s. And there was consternation about that. But the Fed then started its production of funds in accordance with the gold standard, particularly when President Coolidge came to office, and also instituted his tax cut approach as much as Congress would allow him to do. They would only allow him to cut taxes to the extent that he could show a budget surplus in his expenditures. And once he got his first tax cut, he was able to show that every year that he remained in office. So by the time he went out of office at the end of 28, that the top tax rate was 25%. He had cut it almost by 2/3. Now, the important thing to remember, though, in that circumstance, if you check inflation or the price of gold, of the price index in that period, it was the absolute epitome of stability in prices during that period of time. So the concern that the Fed was printing too much money in that period, I simply don't buy, because prices were as stable as they could be.
Well, perhaps, but there was also quite a bit of credit. Maybe that's a better way to say it, was the credit availability, because they were transitioning the population from into a consumer base.
Yes, and there was tremendous growth. And it was during that period that I think our yearly compound our GDP growth was something in the neighborhood of 8 to 10%. I mean, something that we couldn't possibly match today in the wildest dreams, it seems, after we have long since gone to a period of floating dollar value that has allowed every kind of Keynesian imagination to be used about how to jiggle this and fix that and somehow disrupt the normal market corrections of interest rates for unstable credit and so forth. Everything has to be fixed in such a way by those in charge of our money supply and in charge of the Fed that we have a hard time recognizing the market any longer. Right. So if you go back and actually look at the 1920s, there is complete stability in the price index during that period of time.
Right.
And
I think part of that is probably because the dollars were still convertible at the same rate that they were prior, and I
yes,
think to the Fed. And I think that that's really why you saw the stability, because the average income more than tripled. So there's your rise of the middle class and their
yes,
ability to take on credit. But you made a couple of interesting statements. Number one, that the depression was planned. And number two was the complexity of the new Keynesian economics, so that it was intentionally complex.
well, no doubt. And as I also point out, the man who was at the time, back in the 1935, matter of fact, his book came out before the Keynes book came out. Eli Heckscher at the time was regarded as the leading authority on what I was taught as a boy was the old line economic system, mercantilism, which was, in my estimation, it was the kingmaker's approach to government. The kingmakers put the king on the throne, and the commoners did whatever they were told, and the king took care of those who were behind him. And in that circumstance, mercantilist policy catered to monopolies and price fixing. It produced wars, so forth and so on. All those years of at which wars are ordered, and the common man goes out and fights them, and often dies. But in any event, Eli Heckscher said at the time Keynes's book came out, The General Theory, he says he's saying the same things the mercantilists are in terms of his economic constructs and the way he analyzes things. All he's doing is just acting like he's for the common man, and that he's just trying to argue and tell us all these things are good for those common people. And it has been absolutely the opposite ever since. Right now, to this day, the Federal Reserve still uses the Phillips curve, which is the most outrageous use of mind power I have ever seen in my life. That is, the idea that the way you stop prices from going up is to cause as many employed people to become unemployed that they have no money to spend. And therefore, they won't be able to push those prices up no matter what the cost is to them. And that is, to this day, exactly what they do to so-called control inflation. They manipulate the interest rates in such a way as to cause people to lose their jobs. That's exactly what they did in 2007, 2008, when there was no reason for it. Yes, they had inflation, but there were other ways that they could have been on top of it. And in fact, if you go back and look at the monetary additions they made between 2002 and 2007, they were extremely moderate. The first year, the largest year they added to the Fed was $45 billion. And that was at a period after the Bush tax cuts in which we had strong growth. We needed every bit of it. And yet somehow, they were using stimulus into mortgage programs to get lots of people into homes. It's true. But nevertheless, in the fraud that was done in 2008 and this financial terrorism that went on, as I point out at some length in my book, the problem that those who crashed the market in 2008 had is they could not find enough bad loans to make the mortgage market crash. And so they found a mechanism for doing that with mortgage derivatives,
Right.
by which they could make it look like the mortgage bonds were crashing by targeting them with derivatives, in effect puts on those bonds in which they sold short on those bonds and made it look like people were selling them. That was crashing the bond market in such a way as to have an excuse for the market to crash. And then the rest of the crash was was made to happen again by naked short selling of stocks. Very much the same thing that was done in 1929 when it was called watering the stock. They didn't have electronic computers to do it in 2008, in 1929, but they certainly did in 2008. And very much the same kind of thing was done, just like it was also in the tech crash. The tech crash, again, used naked short selling in the markets, selling stock that doesn't exist and making the price go down in order to harvest these tremendous windfall profits of crashing stock prices when the big players sell short.
Okay, can we back up here for just a second because I want
Please.
to clarify something here.
Yes.
So, in whether we're looking at 29, or we're looking at 2000, or we're looking at 2008, are you saying that if they had not sold short, which means selling something that they don't have, and in gold's case typically doesn't even exist, that if they hadn't done that, that we would not have had the market crash because it was just it was a shell game in 29. Well, it was that in 2000 as well, and it was certainly that in 2008. I mean, derivatives are just a big shell game.
Well, let me compare those three times.
Okay.
1929 had tremendous economic growth on the back of major cuts in the income tax rates every year through the Coolidge years. Hoover, the Mr. Fix-It, first thing he did, even before he was sworn into office, indicated no more tax cuts. I have plenty of things on which I want to spend government money. That gave a percentage type drop in the stock market the day he made that statement. But then it recovered, and we went on to see what he was going to actually do. But there are consequences, of course, to the central type action in planning our economy that were very much involved in what happened in the tech crash. As I explained in that circumstance, there was a setup of the tech crash by monetary policy. The Fed was not used as the laboring oar in the Great Depression and setting up the deflation. President Roosevelt, FDR, did all the deflation, and it was a tremendously deflationary time based on his concerted actions, mostly secret and misrepresented, by which he acquired a great deal of gold using tax money and bond borrowing also out of the economy to buy tremendous amounts of gold. Every year, his first 8 years in office, he bought more than 1,500 tons per year. I mean, that's more than twice as much as all the central banks in the world are buying right now. And Zero Hedge, as you I'm sure are aware, just recently announced that all the central banks in the world are buying as if a nuclear bomb was going to go off tomorrow.
Yeah, we can. Yes, we see that in lots of places. Yeah.
And yet they're only buying less than 750 tons a year, all combined. And in the greatest depression we've ever had, with Americans starving to death, Roosevelt, FDR, was secretly, more or less secretly, was completely off the radar in terms of any public attention to it, was buying gold on the open market at the rate of something like 1,650 tons per year, all 8 years. During those 8 years, he bought a total of 13,185 metric tons of gold, taking all of that money out of the economy to do it, and it therefore could not have had any effect whatsoever except prices dropping to 2 to 3 cents on the dollar. That's why J. Paul Getty became a billionaire by buying oil that should have cost him $20. He says, I can buy it for $3.
That's the opportunity in a crisis,
Yes. Well, it
unfortunately.
is.
But
The crisis was produced man-made by taking all the money out of and refusing to allow any of that gold to be monetized. Even when we had in 1936, FDR got a tip from someone that $7 billion in gold had arrived into the Treasury from Europe, apparently because of war fears, capital being liquidated and transferred
right,
into the U.S. Gold was transferred, $7 billion. FDR immediately told Treasury, this is hot money. We can't have it monetized. I'm afraid these Europeans are going to take it out again and going to take it back, and it'll upset our economy just when we're supposedly going to recover. Well, as far as the Diary of Morgenthau is concerned, he apparently didn't buy it, but he went along with it enough to sort of help FDR pressure the Fed. And it was supposedly the Fed who bucked on it and would not agree to that it was a bad thing to monetize the money, because obviously the economy was on its back and needed more monetization, as much as it could get. And yet Roosevelt convened a meeting of both Morgenthau and Eccles from the Fed, his own appointee, and pressured Eccles until he went along, and they wrote regulations to make sure that money was not monetized. And when they put the regulations out, those regulations prohibited monetizing even gold they were buying from U.S. mines. Now, there is no good purpose in that. That was a deliberate effort to make certain there was no money in the economy, and that FDR's elitist sponsors, the Rockefellers that he's kept so much company in, even while he was president, and his European sponsors as well. Those were the ones who were perfectly happy in keeping the Depression going. It came to a point, as I also relate, in 1939, when Morgenthau was presenting himself in his diary as urgently trying to persuade Roosevelt to allow a tax cut. In fact, he had a luncheon with him on March 5th of 39. Remember, the Democrats had lost 83 seats in the House and 38 because of the Roosevelt depression that was going on by that time, as they called it. And Morgenthau told him at the lunch, according to his diary, Mr. President, we've done a plan for you to cut taxes. More or less, he didn't use the term across the board, but he says, I've got this plan, and if you'll adopt this plan, I think I can guarantee you a boom within a month. And Roosevelt winds up allowing him to come into his office. They present the full plan to him 2 days later, and Roosevelt basically runs him out of the office saying, first, you're very naive. That little sign of yours that Morgenthau had brought him saying, does it help the recovery, that he had a duplicate made of the one on his desk that some person had brought him. Roosevelt ridiculed the little sign saying, this is not a matter of politics. This is not a matter of recovery. This is a matter of politics. And refused any tax cut. That was the only year in his term in office that either taxes were increased or added or both, even though the Depression was as bad as it could possibly get, and he kept raising taxes every year. Taxes on the middle class, the earning people, whatever their earnings were or whether they were starving.
well, we recently saw massive tax cuts primarily for the corporations on the theory that those tax cuts would stimulate the economy. Well, it did stimulate some, But what are you thinking, today when we look at what's happening and okay, there's no gold to create any level of restriction in spending or money creation. So when we look at what's happening right now, is the Fed lowering the rates by 1/4% going to, what is that going to actually stimulate?
Well, I don't think it does anything except confuse the market somewhat. What we have is a Keynesian system in which they do everything except allow the market to operate.
Right.
Uh, Everything that the market does, they don't like because it keeps them from doing the things they want to do. And the things they want to do is, for example, do whatever they want secretly inside the Federal Reserve. The Federal Reserve is a private organization. The banking that is done by the Federal Reserve is private banking. Each of the Federal Reserve banks is a private bank. And of course, by far the most influential and powerful of those banks is the Federal Reserve Bank of New York, has far the greatest assets. It's privately owned in every respect, is privately run in every respect. It chooses its president privately. Its president is a permanent member of the Federal Open Market Committee of the Fed, which sets monetary policy for this country. It does it independently, largely secretly. They tell us whatever they wish,
Right.
but their actual operations really are entirely secret. The numbers that we see from the Fed are not at all transparent in telling us either what their debts are, what their assets are, or anything else. But even if you look at the numbers they tell us, in my estimation, those numbers are as scary for a financial institution as any you will ever see. Uh,
Absolutely.
their their assets are treasury bonds and mortgage bonds, both of which obviously are highly interest rate sensitive. And if the market ever again gets hold of interest rates, those assets are likely to be valued at a much lower level than they are presently. We'll put it that way.
So would that be a good tool, because it's not just in the Federal Reserve, but it's throughout our whole pension system and our retirement system, those institutional investors that invest other people's money. Well, God, the public has become the biggest buyer of treasury bonds now through mutual funds, 401k plans, ETFs, all of that. So, is there another crash in our future? And could these
Well,
people?
again, that is largely a construct of the make-believe market conditions that the Fed has created.
Mhm.
And it is why the Fed absolutely goes bonkers, and all its economists particularly do, whenever it is mentioned that anyone even insinuates that we might have a monetary policy based on the gold standard.
Oh, yeah.
The gold standard takes away every toy they have in terms of everything they can manipulate to hide market conditions. So they can not only deceive us as to what we need to do in order to protect the value of our labor and our earnings,
Which is what
uh,
money really is.
but they can actually do things secretly that greatly enrich them at the same
Hmm.
time when they know for their own purposes exactly how valuable it is to have something such as gold to maintain your value when you have great stores of wealth. You
Yes.
can bet they understand those things for themselves while they are applying the tools of the central banks to the common people.
Hmm.
Um, this is a great uh, a great central problem of our United States government.
Oh, it
We
is.
are dominated presently by a foreign ruling power. We are occupied by the outpost of a foreign ruling power. That outpost is called the Federal Reserve. It is owned essentially by foreign interests, those who use it to make themselves much wealthier. They have done that. We have no way of knowing whatsoever how much of the currency that they're making us work hard for they make for themselves and send it out the back door.
Well, and they get to spend it first. And I have, on this note, there are some viewer questions because, we've been talking about history, but we know that the US dollar took over as the world reserve currency in the 40s, and it kind of became a dollar standard. But how close do you think we are to losing that advantage? Because that's a huge advantage for us.
I think we're very close. Other nations of the world are big enough and strong enough and well organized enough that they are insisting upon having something to accept other than the dollar, and particularly other than Treasury securities, as their reserve assets. They have been in the position of being required to use those things, and at the same time selling into our market with the dollar being devaluated as it has, and it most certainly has. Look at just from 1971 to the present, we're down in dollar value just in that period of time, something like I think 97.5%. And that's with the
in terms of purchasing power.
In
Because
purchasing power,
the dollar's the strongest it's been in a long time against other fiat currencies.
Right, but in terms of gold purchasing power.
Correct.
And that is even with the controlled and manipulated price of gold, which I don't by any means regard as actually market value,
Right.
even though supposedly we can buy it.
We
and
can.
of course,
That's the advantage that the central banks are taking, and I'm taking advantage of that as well, because
yes,
we know it's severely undervalued.
and so how close are we? We're as close as the BRICS countries can make it to having a change to a system in which, whether you call it gold-backed notes or trade notes or something of the sort, people in other nations obviously do not trust the dollar any longer. We don't trust it. Why should anybody else?
Right.
And certainly when U.S. economists, the Keynesian economists, openly flout the idea that our treasury debt can always be defaulted, something of the sort. I mean, this is not the kind of thing you do when you're trying to be a respectable world power. Certainly not if you're trying to be the leader of the world community, we'll put it. And in that circumstance, there is a real problem. I think, and I've said this previously, that I believe the president is using tariffs to get to a position of renegotiating our trade agreements in order to balance our current account. We must do that as promptly as possible in order to have a gold-backed currency.
But what's going to happen with, we have to get rid of all of the debts in order to do that. Wouldn't you agree?
Well, dealing with that and the debts is exactly the nature, I think, the negotiations that are likely taking place, not just in regard to so-called trade agreements, but also the currency and what is to become of it. These are the things that need to be reconciled, and by all means on a basis of negotiation and reasonableness, not on the basis of who has the biggest weapons and who can beat who in what war.
Well, and it kind of depends on what weapons you're talking about, too, because today we're not just talking, although they're still doing that, sending people to war and getting killed. We also have financial weapons of mass destruction, the derivatives, and we've got the grid. We've got a lot of things.
Well, those are concerns that I think are being dealt with. I hope that is the case. And
I hope so
I
too.
do think that it really is necessary, both from the American standpoint and from the standpoint of other nations, for stability of relations and for future prosperity. I think there's a real chance that we could get to a position of prosperity that has been so elusive and so up and down and so regularly interrupted by these what I would call man-made crashes in our stock market. We need to have reality come to financial reporting as well as to regular news.
Oh, I would agree with that. What I would say is in my studies, what I've seen is that hyperinflation, where you completely devalue the currency and the people's confidence, happens so they can repay those debts with, in this country, dollars that have no value. And so if we do, Tony asks, hyperinflation will send everything to the moon, limiting the advantages of capital, well, he thinks, limiting the advantages of capital growth in gold. Before this occurs, will we benefit financially from holding gold as the fiat currency devalues? Money printing is implemented and the suppression of gold eventually ends.
Well, I would say this, that in my view, gold is the instrument that you use to maintain the value of your savings. It's not the instrument you choose to get rich, because it certainly puts you in a much better position to get past the great ravine, the great crevice that we have to get across, this emergency that happens when currency fails. It's not a pretty picture from the viewpoint of anyone living in normal society. And in that circumstance, what you're trying to do is preserve your wealth, not get rich. And gold is exactly the thing that I think does the greatest service in that regard. It will be worth its same value in terms of your working and earning power
And purchasing power.
on the other side of the ravine, regardless of what the currency is. If they devalue the currency greatly, then it's going to take a lot more of the devalued currency to buy your gold. Now, you might say that, $50,000 an ounce is a great thing, but it really means that the $50,000 is worth the same amount that your gold was worth when you were buying it for
$20.
Right, $20. That's
Right.
correct, and that's why the people back there working for $20 in the 1930s and 20s and so forth, they were not paupers. They were doing quite well, thank you.
Yeah, exactly.
And as a matter of fact, some of our towns right now across the country still have their grandest days to look back on the 1920s or thereabouts in terms of what they were at one time when they were prosperous as a middle-class town where people could really earn a good living with honest money.
Exactly. And that's the point. It's honest money. So I just want to add in here, Tony, it's not the capital growth in the gold, because when it goes to 50,000 an ounce or wherever it's going to go, those $50,000 won't buy you anything. But if you have them as property values decline, then, as you were indicating before, you have the ability to pick up assets when they're undervalued, because gold maintains your purchasing power. That's what it does.
Very much so, and certainly when we get to the other side of the ravine, and it's $50,000 an ounce, you certainly would not want to be in the position of having only the $1,200 that you had at the time that you had the chance to buy gold for that, instead of the $50,000 that you need now in order to pay for the things that you now have to buy for your family.
Exactly.
So it does exactly what you said. It maintains the purchasing power, and I would say most likely for some period of time, it gives you a leveraged amount until the adjustment is made. But
Yes.
by and large, gold is going to come to the same value in currency that it takes to produce it and to be used and to be useful and to be appreciated the same way it has been much longer than we've been alive. So
Exactly. I love when they talk about like Keynesian and all of this stuff as being, standard when it's only been standard for a short period of time. Classical has been standard for thousands of years.
right. And Keynes, as I said, Eli Heckscher said he went to the side of the Keynesian, of the mercantilists. In other words, in my view, he went to the dark side. And somehow, with this money power,
Yeah.
they were able to get hold of the necks of our universities, turn everyone into Keynesians that gets an economics degree. And I just am thankful that I never went that route. I had one 101 class in economics, and the professor appeared to be the most bored person in the room. I'm sorry to say, although he was a PhD. And I don't know whether at this late date in my life, whether he was bored because he was having to teach Keynesian stuff, or actually we weren't into Keynesianism that much at that point at the university level. But boy, they certainly are now.
Oh, they certainly are. Well, they're trying to keep this going. And, really, it is all about confusion, isn't it? And I've read so many documents from the IMF or the BIS and they actually have said, if we make this really complicated, no one questions us.
Right.
I'm
That's
sorry,
exactly
if
right.
something is that complicated that you have to be a triple PhD to understand, then it's probably not in the common man's best interest. Just saying.
Yes,
Um,
exactly.
Gold is clean and it's simple. But Chris R. asks that I recently came across a post that suggested Executive Order 13603, which is the National Defense Resources Preparedness, was amended by the previous administration in March 16th of 2012, and I remember that, to allow imprisoning, anyone who resisted the gold silver confiscation during times of duress. Is there any credibility to this?
Frankly, I don't know the answer to that. I'm going to, since you asked the question, check into it. I wouldn't be surprised about it.
Well,
It's
I
exactly the kind
actually,
of
yeah,
thing.
because I can answer that. Yes, you cannot stop them confiscating anything, not just gold or silver. If they want your food, if they want your vehicle, if they want your property, anything that they want, they have the legal right to confiscate. If they want you, if they want your labor. So
Well, of course, that's the law that's in place.
that's the law that's
If
in
we were to
place.
have a Supreme Court that actually enforces the Constitution, then we might have something that's in the nature of God-given rights protected by the Constitution, and they would not be permitted to do that. The taking clause of the Fifth Amendment is the protection, but I had the unfortunate experience myself of representing a case that was decided in the U.S. Supreme Court, and I lost that issue 9-0, with the government making the issue making the argument that money is not really property. That is an embarrassing
Money
kind
is
of thing.
not property. It's what your labor, what you
Yeah,
exchange for your labor.
yeah, yeah. It
Interesting.
is your exchange required by law to be exchanged for property, for debts and so forth and so on. And it is absolutely ludicrous to even suggest that. And yet the court didn't even have the courage to address that head on. It said we're going to let this happen because we've let it happen already under the Due Process Clause. And so therefore, if we did it there, it must have been completely reasonable. That is the showing that both sides, Republican and Democrat, have been
Oh,
usurped in power. They are controlled at the top by the same
right.
global cabal, in my opinion.
So I would agree. I don't see a whole lot of difference between the two. But I'll also say, since we're now at a period where we've got a lot of nationalism that's happening and a really global grassroots movement where people are dissatisfied. The income inequality is so obvious these days that I think that that's what keeps the central bankers awake at night, because we have to have confidence in them or we won't use their money or go along with their plans. And they have some pretty significant plans for us, unfortunately.
Well, I'm hopeful. I'm optimistic about our outlook, more so than I was at the time my book came out in 2011. It seems to me that there are straws in the wind all around the world, with a resurgence of an approach toward doing what's right for your national people,
Right.
doing what's right for the people who elect the government, making sure those rights are protected. Those are important political concepts, and people seem to be grasping for them more assuredly these days than they did for quite some time.
Boy, they
And I'm
better do it soon, because we're totally in transition, and what they have in mind, according to their own documents, it's why I do my work, to protect my children and my grandchildren and everybody's children, because ignorance does not make you immune. It just leaves you vulnerable.
Well, I might say to you, I'm not sure whether you got to my chapter 17, but chapter 17 appears in the book as a result of the time at which I found the information. But I thought about it long and hard as to whether I should have put it earlier, um, since it laid out the plan for the 20th century and beyond in some very striking detail. And what particularly just floored me about it is that the man who presented that plan was immediately feted in palaces across Europe, in the White House of Theodore Roosevelt, and was cherished and honored and had as guest many times, multiple times, for weeks at a time with Roosevelt. But in other countries across the world, in the time of his death, H.G. Wells wrote a
Mm-hmm.
manifesto
Right.
of what the plan was by the global elite for dealing with the world. And in any event, I present that at the time I found it. I didn't have that pattern to go by in researching and writing my book, but it came at just the right time. And when you lay it back over what happened in the 20th century, it's absolutely shocking and astounding how much the terrible events that we experienced, including the Great Depression, including the wars, all fit the pattern very precisely, including the Federal Reserve, including the graduated income tax. It was all there, and we're still living with it, with that plan today. So I
And
commend
more.
it to your audience. Yes, and I commend it to, if there's a place to find that information in one place, any place else other than my book, I assure you I don't know about it,
Right.
because I would have allowed it to, I would have been glad to hold it up. But this is the book I'm talking about, The Fruits of Graft. And
And I love the Great Depressions then and now, because really it takes us back to history. You have to understand this, what's happened in the past and the way that everything is laid out, so that you can make a conscious and intelligent choice on how you want to move through it for yourself and for your families. This has been just so enjoyable. I cannot begin to thank you enough for sharing all of this with us. All of the links are below. Read this book. It's amazing. And I did get to chapter 17, but I was a little bit bleary when you said that. But as soon as you said HG, I went, oh yeah, that's right. I do
Yeah.
remember that.
Well,
So,
yeah, there's another part of it too. The last part of chapter 17 is another from another part of the world, comes from Stalin's Kremlin, and boy, is it something. The testimony of a prisoner already sentenced to death by Stalin's secret police and so forth back in 1938, and he identifies who was the most trusted operative in history of the ruling elite, and it happened to be the longest serving president in the history of the United States. That would be
wow.
FDR. So again, all of it is there in writing for you to evaluate and weigh and convince yourself about, because it is information that requires a person to modify his worldview.
Yes, it does.
That is a very painful thing to do.
Hmm.
And by just hearing someone talk, I think it's impossible. You
No,
have
you
to
have
know it
to.
yourself. And so I did it for that purpose, so that people can have a chance to know uh, what was done.
Right. Yeah. So that they can make intelligent choices. Is there, what would you say would be like the one key takeaway that you would want people to know or to prepare for or something? The most important thing.
Uh, well, I don't think I could add much to the conversation. I know there's a lot in the
It's a great
community that try to
conversation.
do that, but it's very useful to look to the people and the ways of surviving for at least a period of time for
Mm-hmm.
yourself and your loved ones.
Mm-hmm.
Uh, yes, preservation of wealth is an important consideration in the long run. In the immediate term, you need the ability to preserve yourself and health and well-being from
Yeah.
the standpoint of food and safety. Those are the things that are uppermost, and certainly your acquaintance with neighbors and friends who
Community.
can be mutually supportive is most important.
Oh boy, I agree with that. My mantra is food, water, energy, security, community, shelter, then barterability and wealth preservation. So,
But I would say that just back on the financial subject for a moment, I
mhm,
believe that what is being planned and negotiated is an attempt to get across this cavern or this canyon of, uh, of danger in the monetary and financial system as quickly as possible before the full crash of our fiat currency. When it goes to zero, then chaos is going to last some time. You can't wait until then to get ready for it. You need to have a system in place. And the preferable thing to do is to make the change before it goes to zero, while it's still operative and worth something. Don't let it go the whole way to drop into the depths. And I'm hopeful that those are the kinds of plans that are being made now and can be put into place with the cooperation of nations as opposed to the conflict of nations. That's certainly what I'm hoping is coming around.
well, you always have hope. I'm not a doom and gloomer. I definitely believe in hope, but being prepared is definitely the best message that I think that you can send. So, thank you so much. And with that, everyone, I hope you enjoyed this. I know this was definitely right up there with some of my very favorite interviews. Such good information. And that's it for today. But we'll be back tomorrow. And until then, please be safe out there. Bye bye.
Thanks so